Have you ever wondered why, when the economy gets shaky, everyone suddenly starts talking about gold? It's not just some old-fashioned habit. There's a powerful reason why this precious metal becomes the star of the show during tough economic times. Stick around, because we're about to uncover the shocking truth about gold's role in economic downturns and how its price movements send ripples across the entire global economy. Let's start with the basics. For centuries, gold has been seen as the ultimate safe haven asset. What does that mean? It means that when other investments like stocks and bonds are plummeting, investors flock to gold to protect their wealth. Think of it like a financial lifeboat in a stormy sea. During recessions, when fear and uncertainty are high, gold's value tends to hold steady or even increase. This isn't a coincidence, it's a historical pattern. When paper money, or fiat currency, loses its purchasing power due to inflation, gold, with its real tangible value, becomes incredibly attractive. So, why does this happen? Unlike paper money, which governments can print more of, the supply of gold is finite. You can't just create it out of thin air. This limited supply gives it an intrinsic value that currencies lack. When central banks print more money to stimulate a struggling economy, it often leads to inflation, meaning your dollar buys less than it used to. Gold, however, tends to maintain its value, acting as a reliable hedge against this very inflation. It's a way of preserving wealth when traditional financial systems are under stress. This is why you'll see a surge in investor interest for gold whenever economic uncertainty or high inflation hits the headlines. It is a classic move to diversify a portfolio and shield it from the losses that can rack other asset classes. Now, let's talk about the relationship between gold and the US dollar. This is a crucial piece of the puzzle. Gold is priced in US dollars globally, which means they often have an inverse relationship. When the dollar is strong, it takes fewer dollars to buy an ounce of gold, so the price of gold tends to fall. Conversely, when the dollar weakens, gold becomes cheaper for investors holding other currencies, which drives up demand and consequently its price. This is why you'll often hear financial analysts watching currency fluctuations so closely. A weaker dollar can be a major catalyst for a gold rally, especially when combined with other factors like rising interest rates. While higher interest rates can sometimes make non-yielding assets like gold less attractive, they can also signal a weakening dollar, boosting gold's appeal. The global impact of these price swings is immense. For countries that are major gold exporters like China, Australia, and Russia, a rise in gold prices can be a huge economic boon. It strengthens their currencies and boosts their national revenue. On the other side of the coin, countries that are heavily reliant on gold imports can face challenges. If the price of gold spikes, their own currency might devalue as they need to spend more of it to acquire the same amount of gold. This intricate dance between gold prices and national currencies shows just how deeply embedded gold is in the structure of the global economy. It's not just an investment, it's a key player in international finance and trade. But wait, the world is changing. We can't talk about gold without mentioning the new kid on the block, cryptocurrencies. Many have hailed assets like Bitcoin as digital gold, a new age alternative for hedging against inflation and economic instability. The rise of crypto has certainly influenced gold's traditional appeal, especially among younger investors. Some argue that the decentralized nature of cryptocurrencies makes them an even better safe haven than gold. This has created a fascinating new dynamic in the investment world. While some investors are diversifying their portfolios with both gold and crypto, others see it as a choice between the old guard and the new. This debate is ongoing, and it adds another layer of complexity to predicting gold's future. Beyond investor demand, the physical supply of gold also plays a critical role. Gold mining is a complex, expensive, and time-consuming process. Any disruption to the supply chain, whether it's due to labor strikes, new environmental regulations, or simply the difficulty of finding new, profitable deposits, can impact the availability of gold on the market. If mining production slows down while demand remains high, you can bet the price will go up. This supply and demand fundamental is always at play, running in the background of the larger economic narratives. Another powerful driver of gold's value is geopolitical tension. Whenever political instability erupts in a major region, or when trade wars and international conflicts escalate, investors get nervous. They start looking for safety, and more often than not, they find it in gold. During times of crisis, gold's status as a politically neutral store of value that is not tied to any single country's economic policy becomes incredibly valuable. We've seen this happen time and time again throughout history. A flare-up in international tensions almost always corresponds with an uptick in the price of gold, as investors move their capital out of riskier assets and into the perceived safety of bullion. So let's bring it all together. Gold's role in the economy is multifaceted. It acts as a historical safe haven, a hedge against inflation, and a buffer against currency devaluation. Its value is inversely tied to the strength of the US dollar and is highly sensitive to geopolitical instability. While the rise of cryptocurrencies presents a new challenge to its dominance, Gold's intrinsic value and limited supply ensure it remains a cornerstone of the financial system. Historical trends consistently show that during recessions and periods of high inflation, gold doesn't just survive, it often thrives. It offers a crucial tool for portfolio diversification, helping to offset losses from more volatile assets like stocks. Understanding these dynamics is key to navigating the complexities of our global economy. Gold isn't just a shiny rock, it's a financial barometer, reflecting our collective anxieties and hopes about the future. Its price tells a story about inflation, currency strength, and the overall health of the financial world. Whether you're an investor or just someone trying to understand the forces that shape our world, keeping an eye on gold is more important than ever. Thank you so much for joining me on this deep dive into the world of gold. If you found this information valuable, please hit that like button and subscribe to the channel for more content just like this. We'd love to hear your thoughts in the comments below. Do you see gold as the ultimate safe haven, or do you think its time has passed? Let us know. Thanks for watching, and we'll see you in the next video.